Well, good morning, everyone. Welcome to our Monday morning trading room. If it sounds to you like I'm talking to you from inside a cave, it's because I'm moving my office today. And right now, there's nothing left in the office except my computers or computer and monitors, which will be going shortly. Um, it turns out that I'm going to have to cancel the room for the rest of the week. We will still have our session today, but the remainder of the week, I'm not going to be able to host the room. I'm going to be out of town here for a few days, and I apologize for the short notice. I wasn't sure Friday whether this was going to follow through or not, but it looks like I've got to head out of town here for a few days. All right, well, Friday session. Very, very bearish. This now the daily NASDAQ chart. And it's not a bad idea to take a look at a broader view chart. The daily, very good for this. And you can see how we were suspecting a move was coming because we were getting all these tiny bars, but volume was a little inflated relative to the size of the bar. Now, what makes volume so difficult to interpret is that it is a relative indicator. It is not an absolute indicator. In other words, you cannot say, oh, well, let's compare the volume on this bar back here to the volume on this bar up here. No, it doesn't work that way. So you always have to kind of keep a relative sense of what's going on. And you can see we had been watching it, very, very tiny bars, relatively high volume given the size of the bar. And then, of course, here on Friday, boom, down they go. And that's put a definite bearish slant on the market. I don't think it's a real surprise. We've been anticipating a little bit of a pullback of sorts for a while now. Still very early here in the morning. We've only got a couple 3 minutes into the session, and yet we're already looking at a pullback, already looking at a series of signals here on the Raptor and the Eagle. I'm not a fan of early signals, especially Monday. For Monday, this is a little bit more typical, isn't it? We're seeing the market with a little increased volatility. For those of you who like your first in-sync Eagle signal, I think you probably did all right here. This one coming just moments after the opening buzzer. Quick little decline. The subsequent signal right here, the Bollinger's not in sync. And if you're using your Bollinger Band suite here as a filter, that would have been one to kind of keep you out of the trade. Here we're coming back now with another signal. Well, we've got a couple of signals here. We've got a red bar buy on the Hawk, which we could short. We have, oh no, the Falcon's going back and forth. Here on the Raptor, we've got a couple number 3 signals. What I'm looking at here is I'm thinking bear flag. Big move down, consolidation. I'm thinking this could well be a bear flag. Ooh, or not. All right, let's set that to the side. I see there's a couple new people in the room here this morning. It occurred to me this morning, One thing that I have not mentioned for a while, the benefits of keeping a trading journal. Now, a trading journal is not like your diary. Well, I suppose in a way it's your trading diary, but you're not really writing down your feelings. You're writing down your thoughts behind taking a trade. I've always been of the opinion you should have two reasons for taking a trade. If you can find two reasons for taking a trade, you'll probably stay on the right side of the market. So your trading journal not only records your entry and exit, profit or loss, but the reasons you took the trade. The benefit behind keeping a trading journal is that within a couple of weeks, you will begin to spot patterns in your trading. I guarantee it. Both things that you are doing right and things that you are doing wrong. And because trading is such an individual matter, you need to discover for yourself what is working for you and what is hindering you. And then you do more of what works and less of what does not. I can show you what suits me. I can show you things that I like to do. It may not necessarily be what will work for you. Well, this was a bit of a crazy move, wasn't it? Look at that. This is one of these moves that's going to show up in a textbook somewhere, because in hindsight, it's perfectly clear what's going on here. And we did have some opportunities along the way, certainly here at the Hawk, giving us several signals. Of course, the first micro macro cross, which came early. The red bar buy, which I was actually considering shorting. I was going to look for the market to bounce up a little bit and then perhaps come down and give me an opportunity to short below here. But no, that didn't happen. The market taken off like gangbusters here. The Falcon with the trend change signal. Well, we had the early, right here was the trend change signal. And then we had a follow-up trend change signal right here. This is the one that led to this power move. The Eagle surprisingly getting shut out. No rule of three signal here, not even a hint. That move came very fast. And then with the Raptor, well, we did get the number 2 signal back here. I did not believe it. I did not think we would get that kind of follow through. And then, of course, the number 1 signal on top of that. So the bulls, very, very strong here this morning. And we've kind of run the market back to some familiar territory here. Again, looking at the daily chart, you can see the 7370 number. We spent a fair amount of time here for the last 4 sessions anyways. Wow, okay, now we're back into the hard edge here on the Eagle and the Raptor. This is usually when we anticipate a reaction. Ooh, and we're almost at the quarter to the hour mark. My least favorite time of the day to trade. I don't know. Do we dare try another buy? Who's actually in control here this morning? The overall trend from Friday, definitely bearish looking, and yet out of the gate, looks like the buyers are all over them. Still kind of bouncing around. Like I said, this is the quarter to the hour mark. This is my least favorite time to trade. A little bit of a bearish pushback now. Yeah, absolutely, Ron. Ron's got some questions here about pricing. Ron, I will send you an email with all the particulars here after we're done here this morning. Oh, look at that. We're right here at quarter to the hour too, and some very tempting signals coming my way. This is something that I learned from keeping a trading journal. How it seemed like at the quarter to the hour mark, I kept sucking up this bad signal. So I learned that, for me anyways, it's perhaps not the best time to trade. That's okay. Once they settle in on an actual direction, it will make trading much easier. Today is the kind of day, however, where you look at your chart and you think, oh man, look at all those moves I missed. There was the big move down out of the open. Let's go back here, the opening buzzer. We had like a hard edge bounce here at number 3 signal, quick move down. Then we came back with this counter trend signal and another number 1 signal, which suggests a new trend is building. And then the big run up, and now we're moving the other way. We get another number 1 signal as the new trend develops, and that one had big follow through. It's okay. Really, it's okay to miss a move. I know it's frustrating. It still beats losing money, though, I can tell you that. All right, so here we go. Which way is the wind blowing? Which way is the trend? We're getting a number 2 signal. That's technically a counter trend signal. All right, you know what? I may try it. I'm going to set my trade calculator here. I'm going to look to buy a second push on this number 2 signal. So let me just set that up, and then I'll explain what's going on here, or what I'm going to attempt. We're back here to the primary support zone. No, they're not following through just yet. All right, so what I was thinking, if the market is going to resume that early uptrend, the second push on the signal simply means I allow the signal to engage. I see where it reacts, and this reaction bar now becomes my signal bar. So this is the bar I would look to enter above. At the time, the Bollinger Suite down here that we featured on a Rabbit Hole Friday a few weeks ago, I was so impressed with it that I left it on my chart. I'm just using it as a filter to see if it's going to be in sync with that. But no follow through on that. Right now, the sellers taking it to the buyers. Taking them to the woodshed. They're almost moving a little bit too fast to get on board here as well, which is very annoying. Okay, here now with a series of number 2 signals. This is going to make a counter trend perhaps a little bit more inviting. Once again, I'm going to look to enter above this number 2 signal. So let me turn my trade calculator on. Okay, that looks like it's going to be close enough right there. And all I'm looking for now, it looks like we're going to get a quick little uptick. If you wanted to run this trade out, given the momentum that we're experiencing here this morning, this might be one to try to run a little bit higher. Darn hard edge. Come on, you guys. You got to get over that. There we go. All right, so what I was looking at here is obviously we've got a market that's in decline, but even declining markets will tend to slow and turn. We had the market slow a little bit back here off this number 2 signal, and then it slowed again here. And notice how it got a little bit broader, if you will, how it put in a little bit of a base. Traders refer to this type of formation as a base. And then we came back with yet another number 2 signal. So we had actually 3 number 2 signals. We had one here, another one here, another one here. That makes a retrace back to the hard edge very, very likely, or more likely anyway. And that's what I was banking on, is that this next move up would in fact take me back to the hard edge, which it did. So even though it looks like a very modest win given the large ranges that we were experiencing today, remember, trading is all about picking your moments, finding a trade that you feel confident with, confident enough to put money on, one that you are reasonably certain will work out in your favor. And after that, the money is all in the multiples. Even though that was just one trade for $100, the fact that we did it with a single contract means that from here on out, if I can do that consistently with a single contract, even though it was just $100, well, 2 contracts would be $200, 3 would be $300, 5 would be $500, 10 would be $1,000, and so on it goes. We'll see here in a moment whether we're going to produce a rule of 3 signal here on the Eagle, the rule of 3, a counter trend signal. As with all counter trend signals, first you have to have a trend. Check, got the trend. But now we're starting to produce signals against the trend on the other side of the trading band. And if the market heads higher from here, this will be what we refer to as a test of the extreme. Muy importante when you're looking for the market to reverse. You need to see a test of the extreme. In this case, back here it was the high. Market goes down, comes up, cannot recapture the high. That is a very good indication the market will try to go the other way. Well, we'll see whether they can take out the low here. If they cannot and it reverses higher, we will produce a counter trend signal, which in turn could signal the end of this move lower and a new move higher. It's always a balancing act between trying to determine the new trend and staying with the existing trend. All right, I think I might call that a test of the extreme, even though technically we did go below here. The fact that we're moving a little bit sideways now also opens up the, oops, wrong button. My office lamp is gone too, so I'm working in the dark here. You can also call this a trading range and treat it accordingly. See, technically we already have the rule of three. 1, 2, 3 signals. I could put my just in case order to buy above here, above that bar. That's the third counter trend signal. And if the market continues lower because we're making lower lows, I could also short below here. So we are getting the market in a bit of a bind. First, I'll set my whichever order develops first. It looks like right now we're going to get the buy order first. All right, so I'm going to set my stop loss below here for now. And I'm anticipating what the market will do here. It certainly does not have to do what I suspect. But I do think because we've established a little bit of a short-term trading range here, that they are getting themselves in a little bit of a corner. Again, a bit of a broader base, if you will. All right, let's see. Let's see if they got what it takes to take out the low and continue with this new trend, or whether this is going to stop them and turn the market higher. Oh, you know what? I totally forgot, and I was going to try this today. I was going to try our fib time extensions, which we looked at last week. So let's draw the extension from here to here. And now, of course, with the extensions, you need to pull them over. Okay, let's see how we're doing time-wise. With the extensions, reversals or continuations with trend, pardon me, tend to occur at either the 38 or 62% level. And as we discovered with the mean Renkos, the 162 also fairly influential. Right now, we're not getting a whole lot off of that, maybe because the Eagle is too big. If I put it on the Raptor or perhaps the Falcon, it would give us a little bit more detail. Let's try the Raptor. No, it looks like it's going to be the same. Okay. All right, here we go, boys and girls. Looking as though we may take a run at the top end here. Oh, or not. The back and forth slop continuing, just reinforcing the fact that we are in a trading range. Well, the Hawk getting bullish here. We did produce a first micro macro cross signal. I don't think it engaged, but it was a valid signal. The Falcon, we got ourselves a trend change signal. The trading band here on the Raptor, very narrow. Okay, here they go for the bottom end. Okay, since I'm doing this on the Eagle, I'll set the Eagle profit target, which would be down here. All right. Okay, let's see. They engaged the bottom end. Let's see if that's going to be enough. We are in sync here with the Bollinger Suite, which is interesting. Getting a little bit of a pushback from the bottom end of the trading range, which is expected. We're probably producing follow-up signals on the other tools. Yes, we are. So we've got a number one signal here on the Raptor. We've got the trend change signal here on the Falcon. Let's go back here to the excitement here at the Eagle. We should see more follow through here though as the market engages this bottom end. If I can get a couple of bearish bars in my favor, I will roll my stops down. I'm not happy about the hesitation. Nuts. This now the retest of the breakout. The smarter play, which I did not do, was to let the market actually break out, then retest. I thought there would be more follow through on the breakout side, but it was not to be. Now they're going to tap me out here. Yep. All right, well, let's close that out. And this time, I'll do it the right way. I won't anticipate what the market will do. Rather, I will actually let them break out. Show me that the breakout will hold. All right, let's put that away. The market now in this sideways range, which is a little annoying. When you get these sideways trading ranges, you know, there's an expression, you look left to be right. I think it's important to recognize there is no trend at this point. And people often asking, how do I trade chop? Well, you know, by definition, chop is something you don't want to trade. The best way to trade it is to avoid it. If that is not in your DNA, the second best way to trade it is to buy down here and sell up here. Anything in the middle is no man's land. It's no woman's land too. All right, well, you can see just a lot of back and forth right now. Okay. We're starting to get a little bit more structure now on this sideways trading range that we're experiencing. Okay, here now the breakout. Let's see if we get a retest. Once we have the retest, so what we're looking at is we have a breakout. Now we're looking for a retest and evidence that the breakout will continue in the breakout direction. Once we have this retest, well, then the market really is tipping its hand because we can set up to short, below, or buy above. Okay, so now we're looking at the retest. What this allows me to do now is I can put my just in case order to short below here. Just in case the market continues with trend. And you can do this on your other tools. I'm just doing it here on the Eagle. But if you drew that sideways trading range on your Raptor, your Falcon, your Hawk really, it wouldn't show up so well on your Hawk because your Hawk, given the frequency of the signals producing here, you could draw a trading range almost anywhere. The Hawk actually giving us a first micro macro cross already here to buy. So already the Hawk a little bit more bullish. Okay, if I get another bear bar here, I will now have isolated the top end of this retracement. Okay, there we go. So now we can, actually here I can use the trade calculator again for this. All right, so I'm going to delete this order, cover the bottom end with my sell order, and now I've got the top end covered. The point of using the trade calculator is, well, I get my profit objective preset, and it also sets my stop loss relative to my risk amount. So I can set my stop loss so I'm not risking more than I can afford. And let's see if they got what it takes this time. In fact, there is a good chance the market will try to get back to the top end of this trading range and maybe even into some of this move lower. Let's see if we have any resistance zones around there. Consulting now the support and resistance suite. Okay, we've got primary support at 73.22.5. Where's the median line? 73.58. I don't know if I'd stretch it that far, but maybe about halfways if I wanted to be a little bit more profit oriented on this one. Assuming, of course, we get out of the top end of the trading range to begin with. And notice once again, technically, I'm trading counter trend relative to what the market is doing today. So we'll see how that works out. No, just not getting the follow through yet. Oh, this is a bad idea, but I'm going to roll my stop here below this low. The reason is that markets, when they're searching for direction, will always try to run the last swing. But for it to get below two swings is a little less likely. But I think I probably found myself on the wrong side of the market here. Should have stayed with the bigger trend, but we'll see. We'll see how this plays out. Not looking very good right now. So we're back here now to the bottom end of the trading range, retesting the recent lows. This is where the buyers dug in, which is why it's a good spot to keep your stops. But we need to start making some higher highs. First, this high at 73.15 has to go. That may open up an opportunity here to buy. If the market actually continues lower, I don't reverse positions often, but this is one that I might consider reversing. Or actually, an easier way to do that is I can just add a contract here. There we go. Because the reason I would consider reversing is this should have gone higher. There's times when you're trading, you do everything right, but the market just has something else in mind. All right, let's see what they got. If we can get above 73.15, it certainly will open up the possibility of a move higher. Shoot, just as I adjust my my exit order so I don't have the reversal, it starts to stall again. There we go. And there they stop. Wow. Well, in spite of having a lot of momentum out of the open, my goodness, it's all but disappeared now. All right, there we go. Doing a little bit better. You can do it. All right, at this point, after all this, I'm going to take the trade to break even. Let's see what the other tools are doing. As suspected, we got ourselves a number one signal here on the Raptor. I wonder if I should maybe do a measured move instead. That would put our profit here. Which would be very reasonable, I think. If I get another bullish bar, there we go. Time to roll the stops up again. Try to protect some of that open profit, I think. Getting a little bit of a pushback now off of the primary support zone. After this trade, I'll take a moment and I'll explain the support and resistance suite. Come on. Oh. As we're getting closer here to the profit target, I'm going to roll bar for bar. So anything with a tail to it. All right, and we'll close that out. Okay. The market definitely in a position here to head a little bit higher. I don't know if they're going to get all the way up here to the median line, which is at 73.58. These lines that you see here are part of the ultimate support and resistance suite. No, they are not Fibonacci retracements. No, they are not floor pivots. Occasionally they coincide with them, but that's more by coincidence than by design. These are actually based on price action over the last 20 days, or pardon me, 10 days. And they subsequently plot where support and resistance is likely to occur. The three lines that seem to kind of set the tone for the day are the three here in the middle. So you've got your median line, your primary resistance above, primary support below. The median line has no other influence other than to show you that it is in the middle of the support and resistance suite. You'll have 10 lines above it, and you'll have 10 lines below it. Generally speaking, if the market is trading below the median line, it will have a tendency to be more bearish. If it is trading above, it will have a tendency to be more bullish. If the market breaks the primary resistance or the primary support, it does have a tendency to go, well, it will usually go at least one zone. Very often it will move two zones, which enables you to use your support and resistance lines as profit objectives as well. All right, well, that one took a little bit of work, but it worked out. When they made that second run here toward the lows, I did not think I was going to ride that out. Okay, now after that, I'm glad I took profit where I did. We're getting the pushback back now here to the hard edge. And what do we think? Maybe another move lower? I would say that is the trend today. Let's see where this lines up relative to today's range. I don't know, does that look like a 50% retracement? Maybe. Oh, let's shrink this up, that'll make it easier. No, not quite. Looks like, oh, wait. I didn't draw it far enough. Oh, pretty darn close to a 50% retracement. That could definitely make the market a little bit more neutral again. And here they come. We're in the hard edge of the trading band here, both on the Eagle and the Raptor, so we're going to expect some sort of reaction as a result. Because we're also at the 50% level, I might try another short. It looks like here the Raptor may be producing a sell signal, and I'm going to play here now with the fib extensions. Oh, look at that. We had the number 2 signal right here at the 62% line. Darn it. I could already be short. Could have nabbed another $100 there. Oh well. Let's see if it plays out on the bigger one as well. Anything else giving us a signal? Well, yeah, here on the Falcon, we're actually going to produce a late filter entry signal to short. And let's take a look at that. So I'm doing the second push opportunity now on the late filter entry signal. Allow me to explain. Filter goes out of sync, comes back into sync. The trend line itself never changing color. That tends to be a pretty high probability signal here on the Falcon. We'll see if we get enough follow through on this one. Come on, you guys. There you go. Get down below that low here. Take out that little swing where we saw some buying, and that should be enough to push the market down here for us. Come on, sellers. Really? Is that all the sellers have in them? Is to recover this little bit of a trend after that monster move lower? No. It's not looking very promising at the moment, though, is it? Very neutral again. Very sideways. I hate that. You know, if the market at this point, if it breaks the low, there's a very good chance it's going to try to head toward those lows. If you were inclined, you could stretch your profit target. Maybe I'll go just on the other side of 7,300. Oh, look at that. 73.08. Very sticky. While I have the time here, let me remind you, no trading room for the remainder of the week. I'm sorry, I have to head out of town here for a few days. My apologies. All right. Again, this is not something I normally do, but if I get tagged here, I will consider the reverse. So they just stopped me out. I'm going to throw my exit order down here. The sellers had ample opportunity to bring the market down. They did not. So I am now going to look for a move back to the median line. I'm going to see whether or not they're actually going to get up here. As we wait for the last little bit of the market. You see, it's not always a bad thing to take a loss. Sometimes a loss will show you what part of the market to avoid. Like I said, they had ample opportunity to head lower. They did not. That does open up the possibility that they will head higher. Maybe I won't make it work quite that hard. Maybe we'll look closer here to the 73.50 zone. Just dead flat. Welcome to the chop. Wow, that's just brutal. Oh, I forgot my time extensions that I had on here. Oh dear, I hope the downtrend doesn't resume at the 162, which it sometimes has a tendency to do. Well, after what was a very brisk start to the day, things getting noticeably quieter. All right, once again, let's maybe try a measured move here to see where we might anticipate the market to go. All right. Here we go, getting a little bit of traction now. Enough anyways, I can get my trade up to break even. Note that we are very close to our eagle target. So there's a fair chunk of change on the table here. Don't be shy about protecting more of that. Okay, and here too, I'm going to get to the point where I'm just going to start protecting profit on any bar that has a tail to it. So this one right here, if this one gets a little bit more bullish again, I will roll stops below that. Come on, just there we go. That's all I need. And now I'm going to squeeze it. Come on. You can do it. Yay. All right. So, like I said, I don't often reverse on positions, but sometimes the market showing you which way it does not want to go is almost as good as showing you which way you should trade. You do want to be a little selective, though, when you incorporate that strategy, because if you get caught in the sideways chop, well, the market will just churn you around until there's nothing left of you. All right, everyone. We'll be closing up the trading room here at the top of the hour. Again, a reminder, no trading room for the remainder of the week. Unfortunately, I need to head out of town. But a good morning overall. Even if we were looking at doing our 3-trade quota instead of just a single trade, we've made our 3 trades. We're in the black, so we would stop trading at this point. That's the key to consistency. That's the key to making money trading. Don't get greedy. Find yourself a good signal, a signal that you have confidence in. Now, it doesn't matter whether you're using the Hawk, the Falcon, the Eagle, the Raptor, they all have their high probability signals that you can focus on. Here on the Hawk, for instance, you have your first micro-macro cross, which is a very high probability signal. On the among others, on the Falcon, you have your trend change signal and your late filter entry signal, that both of which tend to be very high probability. The Eagle, you've got your hard edge bounces, your red bar buys, and your green bar sells. So here's a green bar sell, here's a red bar buy. And then, of course, your basic trend change signal. As your band changes direction, your first in sync signal, among others. And of course, with the Raptor, the programming giving you the prompts for the higher probability setups. Your hard edge bounce here, the number 3 signal, your trend change signal, the number 1 signal. Both of which working out very nicely on that particular move. If you are going to continue trading today, well, let's see here. We'll use the daily again as a reference. The trend, I believe, you can't ignore these very, very strong days, especially since we had a very bullish day and then the very next day reverses and heads lower. Traders will be looking at this from various points of view. Some will call this these tweezer tops. Some will call them mirror candles. Some will call this an engulfing pattern. But the fact that we had all that bullishness only to be reversed on the Friday, to me, puts a very bearish slant on the market. I think you could shoot a trend line about like that. And I think a move, just kind of eyeballing it, somewhere around 72.50. I don't think that's out of the realm of possibility here over the next few days. We may not see it today, may not even see it tomorrow, but I would think by the middle of the week, somewhere near this trend line, we could see the market drift that low. And of course, once you encounter the trend line, expect a little bit of a break and then a pushback as the buyers get all excited about trying to move the market back up. But for today, gosh, I don't know, we're almost back to where we started the day, which means we're neither bullish nor bearish. I guess you just gotta play the signals you have. Right now, the market full on bull market. Expect a little bit of a pullback, perhaps to the first hard edge here on the Raptor, maybe even to the bigger hard edge here on the Raptor and the Eagle, and consider that a buying opportunity. I would, at least on the first attempt up. All right, gang. If no one has any questions, we're going to close up shop again. My apologies, no trading room for the remainder of the week. I will catch up with you again next Monday. I think that's April Fool's, isn't it? I better double check the calendar. At any rate, have a good week. Be careful. I am still available via email, and I will do my best to respond in a timely manner. So if you have any questions, please don't be shy to ask. I'm here to help the best I can. We'll talk to you next week. Bye for now.